Hey guys, this is Jacques, and I've been promising some of my friends that I would actually make a video showing how I trade in binary trading. Now I use the app IQOption. You can trade on the website, you can use the app on the computer, or you can download it to your mobile phone via the App Store and trade there as well. Now before I get started, a couple of things I would say. Firstly, I would not rely on signals you get from chat. If you click on the left here in the interface, you'll see there's chat, and you can go into chat and you can chat to people. And yeah, so if you start with a new account, and like me, I started trading with VND with bare minimal. I put in like 200,000 VND, which is about $8, and they don't allow you to chat unless you either put in $1,300 or your winnings add up to $1,356 or something like that. So I literally had to play all the way from $8 up to $1,356 before I could get into chat. But I am in chat now, so that's pretty cool. Now, one thing I would say is a lot of times in chat you get some free signals. Now, what's a signal? That basically just tells you when there's going to be a spike, whether the stock's going to radically go up or radically go down, and people will say, call or put. And I would highly advise to be very careful when getting these free signals from the guys in chat, because I've lost a lot of money listening to guys in chat. I mean, there are some good signals, but for the most part, a lot of them are bad. And especially when somebody says it's going to go up now for 2 minutes, and then I tend to put quite a little bit on that, thinking this guy knows his stuff. Especially the guys that have the little crowns because they're VIP traders, and then it turns out it's going in the opposite direction, and I lose a ton of money. So it has been quite annoying. So I've kind of learned to ignore chat. There are 1 or 2 people in here that I have seen give good signals, so occasionally I might listen to them, but more and more I'm relying on myself and less on the signals in chat. So I would just advise you guys, before I go further, just sort of try and ignore chat, try and ignore what you hear from there, because you will end up losing a lot more than you do win. Okay, so with that out of the way, let's look at IQOption. So what is IQOption? Well, binary trading is basically predicting where the stock is going to be in the next minute or the next 5 minutes or whatever expiry time you set. Now by default, the expiry time is usually 1 minute. You can set it over here. Expiration time, it's usually set to 1 minute. So you've got, in 1 minute, you've got to predict, will the stock be higher or lower than where it currently is. Okay, so the stock moves up and down constantly, and you have to predict. Call means it will be higher, put means it will be less. So you basically predict it's going to be lower or it's going to be higher by this cutoff line over here, this red line. Okay, and you can call or put up until this dotted line. After this dotted line, you cannot put or call anymore. So you cannot predict after the white line. So once you hit this line, you just got to sit and watch it until the red line and hope that you either call, if you call, that it's higher, or if you put, it's lower. Okay, and that is pretty much it. You can set the amount that you want to bet here. Okay, and there's your profit. Your profit is 88%. So on $1 you get 88 cents back. Okay, if you win. If you lose the whole dollar. And that's pretty much how it operates. Okay, so it's very easy to do. You predict call or put, and that is it. You win, great. If you don't win, you lose some money. Okay, now there are different trading options here. Binary, which is the one I'm going to show you today. You get crypto, you get classic, and you get digital. Now these are all pretty new. I mean, they've just been added in the last few days. So up until the last few days, it's pretty much just been binary. Now I haven't really played with classic so much. I've played a little bit with digital, and I've managed to play around with crypto quite a bit. So I can basically advise you on binary and crypto, and probably digital, because digital is pretty much like binary, except the profit is a lot more in some cases. So they are virtually equivalent, with this one a much larger expiration time, and therefore the profit is so much more on this one. You kind of have to predict 5 minutes ahead, which is very difficult to do. But I'm going to concentrate on binary today. Okay, so you can open options here, and if you go to binary, you can see which ones are open, which ones are closed. Those are all closed, they're opening soon. These are all open, and you can see the different percentages that they pay out. Okay, so I've put a few here just for demonstration purposes. Okay, so basically you choose your asset. You can open up to 9 assets at any point in time. You predict 1 minute ahead whether it's going to be up or down. Call for up, put for down. You select your amount, you select your expiration time. You can put the expiration time to 5 minutes, and then you can predict 5 minutes ahead. It's all up to you. Most traders will probably use 1 to 2 minutes to 3 minutes maybe. I don't know many people that will predict 5 minutes ahead, unless they have some kind of external source where they're getting their knowledge from. Okay, now the key with trading is basically being able to predict, and also being able to see large spikes in stock movement. To be able to see, wow, the stock is jumping up, or wow, the stock is taking a dip. That is key in trading, especially binary trading, because you got to predict whether it's going up or down. These flat lines in the middle mean nothing. Okay, what you want is this. You want to see these spikes. Okay, and you want to be able to basically predict when the spike's going to happen. Okay, so you want to see it happen almost instantly and take advantage of that. Okay, so for that purposes we use indicators. Okay, by default when you get this interface you've got this kind of graph, okay, which really doesn't tell you much except you can just see the stock movement. I've added a couple indicators. I changed my chart type to candlesticks, because with candlesticks you can actually see how much or how strongly the stock moves. When it does move in a direction, you can see how strong the spikes are. Okay, and I'm just going to quickly run through some of the indicators here. Now this is called the 7 indicator strategy that I use. The 7 indicator strategy. Okay, which means I have 7 indicators. I have 2 EMAs, 1 WMA, 1 AO, 2 parabolic SARs, and MACD. Here all the indicators are here. For MA you can set here WMA or EMA. Okay, so it's part of the MA indicators over there. Then I've got a MACD indicator. I've got a parabolic SAR, 2 of them. I've got an awesome oscillator. So let's just quickly go look at these. My first indicator I set to EMA 18, and I set it to the color blue. I set it thick, EMA 18, and apply. Okay, so that's blue and thick. That's that one that you see over there. Okay, so that's the thick blue one over there. The second one is a WMA8, color red, thick, and that's the one you see over there. Okay, and then I've got the EMA 9, period is 9, EMA white, thick, that's the one over there in the middle. And then I've got the awesome oscillator, which is 34.4 AO, which is this one over here. And then I've got the parabolic SARs, 2 of them. One is the different values. One is blue 0.2, 0.02, blue, that's the one over there. And then I've got the other one which is green, 1, 0.2, and green. And then I've got the MACD, which is blue, orange, and white. The thickness is quite thin there. Now before I continue, I make these lines of the indicators quite thick with these 3, because you know sometimes you sit away from the computer, or you lean a little back, or you're sitting on the bed, you know, just sort of a little, or you're viewing your computer at an angle, and I found if I make them thin I don't always get to see all the details that I need to see, so I always make them thick. It's very I advise that you keep those 3 lines thick. The MACD you can put as thin, that is okay, because this is more of a guide. I barely use the MACD, but these 3 lines over here, always set them as thick. Now let's go and have a look at what these indicators mean and what they do and why I've put 7 indicators on here. Okay, so firstly, let's look at the AO. The AO tells you how strongly your stock is moving and in what direction it's moving. Okay, so here you can see it's moving down, it's taking a dip, it's red, and it's below the line. Okay, it's below the line, it's red. Then you see it goes green, but it's still below the line. Okay, which means it's at the point of turning. Okay, but it doesn't always mean that it will go up on the other side. Let me see if I can find an example. Here's an example. Okay, here we see it's red, it's below the line, the stock is dipping, it's dipping, it's dipping, and then it goes green, starts turning, but then it dips further, and then it goes green, and then it sort of starts climbing. Okay, and then with the green above the line, as you can see, it's now climbing rapidly and consistently. Okay, so that's the green above the line. So that is pretty much, if you look at your AO, that will really tell you in which direction your stock is moving and how strongly it is moving in that direction. It can also tell you, for example, there I can see it's starting to dip, which means it's either going to spike up or it's going to probably most likely come down. But there we see there's a spike, so there we go, it spikes up. See, I've started reading this so well already that I already thought that might be a spike over there. Anyway, so the AO basically just tells you how strong the stock is moving in that direction. Okay, and the MACD basically will just show you the average and the pattern. Basically it's the pattern of the movement of the stock, right? So these two I just kind of use for guides. I don't rely on them that strongly. The AO I do use a lot, but not so much the MACD. I just keep an eye on it, but I don't really use it that much. Okay, so let's get to these 3 indicators. Okay, so when the white line, which is the EMA9, I use as my default line for basically where the stock currently is. Okay, so I just kind of use that as an indicator for the general movement of the stock. Okay, that doesn't really predict anything. If I'm watching the stock, that's the line I'm keeping my eye on. Okay, so there it's going straight, and if the white line goes up or down, that just means the stock is moving up or down. Now the parabolic indicators also show the up or downward movement of the stock. Okay, the blue one shows the sort of a slower average, where the green one will show the sudden spikes, as you can see there. That will just show sort of at a curve, but this one will go up more strongly. You can see that it actually shows much more of a strength in the direction that the stock is moving. Okay, and then the EMA 18 and the WMA 8, which is the blue and the red lines, okay, they are mostly what I use to predict these spikes. Because if you have a look here, you'll see that every now and then they cross paths. These 3 will cross paths. Okay, and when they cross paths, the stock will either move down or it will move up. That's basically how we use to indicate a dip or a sudden spike, is when these 3 cross. Okay, there you can see they crossed and the stock moved up. There they crossed, the stock moved down. There they crossed, the stock moved up. Here they crossed, the stock moved down. There they crossed, the stock moved up. There they crossed, the stock moved down. So you see the pattern. So basically you set these indicators and you keep an eye. There we see it crosses, the stock moves down. Okay, so you keep an eye on these 3 indicators. When they cross, you know, that's pretty much an indication of which way, you know, whether the stock's going to suddenly spike or climb, you know, spike up or spike down. Okay, so it could be going flat and then these 3 cross and then it goes down or up. That's pretty much what these 3 lines, what I keep an eye out for. Okay, now if it crosses, then I look at the MACD. If they cross, I look down at the MACD. The candle after that, is it green above the line or is it red below the line? Because if you have a look here they cross, the next candle is a red below the line, red below the line, red below the line. You see here, it's going down. Here they cross, the next candle is green, 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 above the line. It's climbing. You understand? Here they cross green, green, and then it goes red. Got to watch out for that as well. Here they cross red below, down, 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 down. Okay, so you watch out for this, that. Okay, so when it crosses, you go straight down to the AO and you look, is it red below or is it green above? That will indicate which direction it is going to spike, whether it's going to spike down or spike up. So if it crosses and it's green above, it's going to spike up. If it crosses, it's red below, it's going to spike down. Okay, the other indication is if it crosses and it's red below and the blue parabolic dot is above the cross, okay, that means it's going to spike down. That's just an extra, two extra indicators I use just for safety. So you can see there it crosses at that point, the three lines cross, it's got going down over there, and the blue is above. So that's pretty that's a safe bet over there. Okay, so there I would put and it will go down. Okay, it will spike down, which is exactly what I want. Okay, I'm gonna show you this in practical just now. I'm just trying to familiarize you with the indicators and what they mean. Here we go again. Here they cross. However, be careful with this one, because they cross over here. Okay, the blue is above, but if you look down here, the green indicator is below the line. Okay, so it's not showing a first red below the line. As you can see, the spike wasn't really big. Okay, so you have to really be careful, because sometimes you get these large spikes down or up, which is what you want, and sometimes you get these tiny little spikes and then it will just flip the other way, and that happens quite often. You know, I mean, with this kind of 7 strategy indicator strategy, you should probably have a 70 to 80% chance of winning a call or a put. It's not guaranteed to always work, but it does help you predict these spikes. As you can see there, it never crossed. You see, most guys, when they see that first down spike, they put down, but you shouldn't, because look at that. The lines never crossed over there. Okay, there they crossed, and the next one is up. Okay, as you can see, going up, it crossed. Understand, it never crossed there, even though it looked like it was going to suddenly dip. The lines never crossed. You have to be very careful and watch for that. Over there too, the lines never crossed, therefore it was just a slight dip. It wasn't like here, it wasn't a big spike, because the lines actually didn't cross. If you actually zoom in, you'll see what I mean. They never crossed. You have to watch for these lines that cross, and then you see, there we go, it's steadily going up, because they actually crossed there. They never crossed there. Okay, so you get the picture. Okay, so if we go have a look at something else here, let's see if there's anything else interesting. Okay, now here you can see it looks like it's still climbing. However, the AO is showing that it's actually on a downward trend. So a lot of traders will make the mistake thinking, wow, this is still climbing, I can put a call here, not knowing that it's actually going down. It's actually descending, maybe slightly at a time, but it's really on a down spiral over here, unless you see the green, which is popping up there now. Okay, so in a nutshell, you have to be careful that when the lines cross, like for example there they crossed, it's green, it's above, and it's sort of just going through. It's green, it's above, there's going to be a spike. That would have been a safe bet over there, to put a call. Understand? So yeah, to go over it again, you look for the lines that cross. Here they cross, it's green, it's below, but it's not massive, it's not huge, so be careful of that as well. Okay, the blue parabolic is above, the green is above, and here we go. Is it going to cross? It looks like it may. There we go, there's a cross. The green is above, the parabolic is below. It does show spike over there, but I would be careful, because there was a red candle between the green, but it does look like it's going to be a nice spike. Okay, so now with these indicators, obviously you cannot tell how large the spike is going to be, how long it's going to last. Okay, but if you know, without these indicators, you wouldn't know anything. You wouldn't even know there was going to be a spike. So basically these indicators just help to predict spikes. Okay, they help to predict spikes. Like there, okay, I can see there's a spike, it looks like it's a big downward trend, and I put, okay. And remember, you only have to predict about a minute ahead. Okay, so the spikes don't necessarily have to be big, they just have to last that you know, usually I don't usually bet a whole minute ahead. I would bet maybe around here, about 30-40 seconds. So the spike only really needs to last about 30-40 seconds for a win. But something else, you also have to read the pattern. Okay, and this is what most people don't really do well. The thing in trade that will kill you more than anything else is impatience. You have to be extremely patient. You know, it's pointless just betting on every single spike and losing off your money. So what do? Well, now that I have my indicator set up, I can tell spikes when they happen. I don't know how big they're going to be, but I can tell spikes are coming here and there and there and there. I can see. What I like to do when I start trading, because once I've set up my indicators, every time I close the app and open the app, you know, I can now see all the indicators are there, and they'll continue to stay there. I don't have to set them again. What I usually like to do is I like to zoom out. I zoom out, maybe like 1 day back or 3 hours back or something, and I go look at the trend of the asset that I'm trading, and I can see if it's on an upward spiral or a downward spiral. There you can see it looks like the Euro NZ is on a downward. See, it's going down, it's going down, it's going down. At the moment it's on a downward trend. Now what that tells me is it's most likely going to continue on a downward trend, at least for the immediate future while I'm trading here. So then what I'd like to do, if I see that the usual general trend is downward, I prefer to catch the downward spikes, because it's a downward trend, they will last longer than the upward spikes generally. Okay, so not a rule of thumb, but it is a guide. If I go to the Australian US dollar and I look there, let's have a look at that trend. I can see that trend is mostly going up, and therefore the upward spikes will last much longer than the downward spikes, which you can see here. There's a little downward spike, but look at that upward spike. Look at that long upward spike. But look how small that downward spike is, and then you get that long upward spike. You understand? So the first thing I do is I go look at the asset, the history of the asset, the last few hours, and I can see if the general trend is upwards or downwards. If it's going up, then I know, okay, so I'll be waiting for the next upward spike to determine whether I will place a call or not. Okay, even if there comes a downward spike and it is quite big, I ignore it. Okay, unless I know it's going to be huge, I ignore it, because there's always going to be more spikes. So don't be hasty. I've sat here sometimes for many hours before I actually place a bet, and you know, I may have 15 or 20 missed chances. All of them I could have won. I don't care, because they weren't guaranteed. You know, at the time I wasn't sure, and I want to be sure, so I want to win. So I just need to win a few times a night, a couple of bets here and there, and I'm happy and my goal is reached. Okay, so I wait. As you can see, it looks like it's going upwards, but the lines are not crossing, and that is still red. Okay, it's not green. So I wait. I don't do anything. Even if it does look like it's going up, I don't do anything. Okay, here we look. We go back, we look. That's a downward trend. There's a downward spike, as you can see there. A nice long downward spike, which I missed. That's okay. This one's also going down. Let's go closer and go have a look what's happening here. Okay, now this is a perfect example of something else I want to show you. You see here, it's very erratic. It's jumping all over the show. I mean, you get an occasional long spike, but apart from that, it's jumping everywhere. which means it's swinging both ways at this point in time, which means this is a bad asset to trade on. When I see this kind of thing happening, I just simply close it. I'm not going to waste my time. Too many times in the past, especially when I was new to this, I would you know, get caught with trying to trade on something and it would spike the other way. This is the kind of thing you're looking for, these nice long spikes, you know. And as you can see, once again, this is on a downward trend over here, so the downward spikes are much larger than the upward spikes, and it seems that all of these now it's currently in the middle of a spike. Here I just missed one over there, that's crossing over there. It's showing it's green, it's above, it's showing it's green, this is below. I just missed a nice long spike there. I could have made some money there. Okay, this one is turning, however the lines are not crossing, so I do not trust it, which means it could swing the other way as well. Okay, it's not crossing. See, the lines are not crossing. Okay, here we go. The lines did cross there, but at that point when they crossed, this wasn't above. So again, I'm just watching. I'm not going to put on it. Most about trading that I find is it's a waiting game. You know, you cannot do this if you're impatient. You have to wait. You have to be really patient and really careful. It's not just about clicking a button. You will lose so much money so quickly, trust me. It's very much a waiting game, watching the patterns. So yeah, I know I'm clicking around here a lot, but you really shouldn't. You should have your eye on one or maybe two of these at a time and just keep watching the pattern, because you get used to how often it spikes, how big the spikes are. Is the spikes mostly down or up, you know? And so when the next spike comes, you already know it's going to last about 10 or 20 seconds, because that's average. You know, the shortest spike was like 25 seconds, so the next spike shouldn't be less than that. You can sort of start predicting if you just watch this pattern for a while. Just watch it for 10 or 15 minutes before you even try and trade. There's a nice downward call, and let's see, they crossed, it's below. Let us see, and I put okay, let's see, there we go, come on, and it's a win. 82 cents. You see there, they crossed over there, it was below the line, it was red, it was quite a huge spike, and that is money in my pocket. Okay, result, you see, it spiked, it was red below, the blue was above, the green was above. It was a nice downward spike. I caught it just in time. That's why I didn't point it out first. I just clicked because I knew I needed to catch it quickly. So that is a win. That was 82 cents that I won there. Okay, now if I bet more than $1, let's say I bet $10, I would have got $8.20 back. Okay, so you can really edit this. I mean, you can bet thousands at a time if you want to waste thousands at a time. I would suggest in the beginning to keep your bets small, but as you saw there, I saw the lines cross, I saw it's below the line. It was quite a big candle, which told me it was going to be quite a spike there, at least in the beginning. This was above, that was above the cross, so the two parabolics are above the crossing of the lines. This is below and it's red, which told me it's going to go down. Anytime it shows green, it means it's going upward trend, red means down, and so I put and I won. Okay, so that is the kind of thing that I'm on the practice account now, so I don't really care too much about losing money. This is just for you know, demonstration purposes. I'm not going to put my real finances on a video. But anyway, so there was no big risk to me firstly, but I just kind of wanted to show you how I do it. Okay, and usually I wouldn't be so quick to jump on something. I'm a little bit more experienced now, so the risk was minimum. But in the beginning, don't just, when you see it spike, don't just click. Okay, watch the pattern for a while, you know, to get used to it. Here I see it's going up, it's crossing. First one's green, second one's green. That's a safe bet right there. Okay, so there I would usually put a call over there. Okay, now Here again, let's see, it's not crossing though, it's not crossing, the lines are not crossing, the blue and the red are not crossing. However, it is on a downward trend, so that's I don't know. So there's exactly, that's what I was afraid of. When they don't cross but it goes spikes down, even 2 or 3 candles, you have to be very careful, because you don't physically see them cross. If you look carefully, they're not crossing, and then it tends to do that kind of, you know, flip the other way. So you have to be careful of that. You got to watch where they cross, what kind, is it going up, is it going down, how strong is the spike up or down. I mean, there's crossing and the spike is up, but it's not very strong, you know, so it's not reliable. You want this kind of upward movement, 2 huge candles like this, but after it crosses. Okay, so that's the 7 indicator strategy that I use. It's fairly safe. I make probably about 80% wins of a year, and I think it's becoming more and more as I myself am getting used to reading, and you know, the quicker you get and the faster your reflexes become with reading places it cross, because many times it does not cross. It looks like it does. There, it looks like it does, but it doesn't. You know, your eye gets used to seeing it. In the beginning, you'll just click because it looks like it crossed, but it didn't. If you go look closer, you'll see it actually didn't cross. Okay, and I've now become used to noticing when it crosses and when it doesn't cross. Okay, so that's my strategy. It works pretty well, as you can see over there. Again, it didn't cross. I mean, there's a downward spike, but remember, you were going a minute ahead, which means you might have clicked and gotten it over here somewhere, and now it's busy trending upwards at the end of the minute, and it could go slightly above where you put. So that could have been either way. Could have been a win if I'd gone with that, but it was a risky win. Yeah, you don't want risky wins. You want guaranteed wins. Okay, or at least most likely very much in your favor kind of thing. So you wait until it crosses, and then you look where it is and how big the trend is. Okay, and where the parabolics are, because this one will tell you it's moving down, that one will tell you it's moving down steeply, this one will say to you it's also looks like it's going quite a bit down, and no cross, so skip. Understand? You're also going to get days where it does jump around a lot. Assets tend to jump around a lot. When they're risky like that, just skip it. Close the asset, move to another one. Find something that's not as risky, something that has more of a smoother trend to it. And then you're going to get days that they're all pretty much like that, and that's usually OTC weekends. Stay away, just close your computer. That's very difficult to do, by the way, but just close your computer and come back when it's better. Yeah, otherwise during OTC or when you have huge spikes going both ways, I would say keep the trades very small so that your losses aren't very big. But this is how I trade. I sit for many hours just watching the trends, getting used to the pattern, seeing what's going on. Again, yeah, they did not cross. You see, there's no physical crossing of the lines. So most people would have seen that. Again, another one, did not cross, unsafe. Not only did it not cross, it actually spiked down while this is showing green. So untrustworthy. You need to watch for where it actually physically crosses, like here. You see here the lines actually cross. The blue is above the red, and there it's below the red. It actually crosses there. And the next one was a green upward candle, and there we had an upward trend. So that would have been a nice call, but I missed it. Okay, so there's the 7 indicator strategy. Not perfect, but it's pretty good. And as you can see by the evidence, if you just go look at the history here, that would have been a good win. That would have been a good win over there. Over here you saw it didn't physically cross, so there's the evidence. Doesn't physically cross, and then it spikes up and down. Not really a sure thing. Okay, so for a beginner this is good, it's perfect. Here's a nice downward trend, but again it didn't cross. That would be risky, because as you can see there's a little green candle. It would be risky. You could win, but that would be risky. That's not a risk I would take. Okay, I mean, you could win, but still risky. Again, risky. I mean, that's a good win over there. Probably if you had bet here where it actually did cross and started spiking up. But you know, when it comes down, sometimes you think, okay, no, I shouldn't put, and then it suddenly spikes up. Still risky. you can win on those. Here's another example. You can win on these risky ones because sometimes they do spike for a long period of time, but that doesn't happen often when they don't cross. Although, you know, is this a cross over here? I think here it might have crossed, because if you look here, the red line is above the white and the red line is below the white, so I actually think they did cross over here, and then this is actually where the trend started. But that's very difficult to actually spot. So again, I probably wouldn't have bet over there. I would have skipped that one and waited for the next one where I could physically see they crossed and would have known it's much more of a sure thing. Okay, so with that out of the way, so now that you know how the indicators work and pretty much what to look for, I want to discuss a couple of other things. One, set your goals. Okay, set your winning goals and set your losing goals for the day. Okay, so very important to have a winning goal and a losing goal. Okay, if you put in, let's say you're sitting on $50 or something and you want to make 70, okay, then your winning goal is $20. You want to win $20. Okay, or if your winning goal, don't set it too high either. You know, 50, maybe make it 70 or 80 or 100 or whatever. Don't put it 3,000. You're never going to hit it in one day. So if your goal is to get $20 for the day or $30 for the day, that's it. Only play to your goal. Once you get to 20 or 30, cash out. That's it. Close your computer for the day. Okay, because if you do start overplaying, you're going to start losing as well. And the reason for that is concentration, fatigue, you know, addiction, all these emotions that will start getting involved when you start hitting goals. Trust me, I've been through this. Don't overplay your goals. Get to your goal and log out. It's the best thing you could ever do. Okay, and then have a losing goal, because if you're losing a lot, it probably means it's not your day. Maybe the market's jumping all over the show, maybe your concentration is off, maybe you're just overtired, irritable, or whatever the case, whatever reason you might be losing, it's clearly not your goal. So continuing to trade, you're just gonna end up losing more and more and more. So set a losing goal. If you're on $50, set your goal, I want to make 70 today. So that's a good day, I want to make 70, but I don't want to go less than 30. So if you start losing and you hit 30, log out. Just get off the PC and try again. After a good night's sleep, you may have better luck the next day. So that's probably good advice that I can give. Set yourself a winning goal, set yourself a losing goal. Every day is not going to be a good day. Most days should be good days if you're lucky, but not every day is going to be a good day. And then the last one is patience. Patience. You know, I once sat for 3 days before I made a bet. I was watching these graphs. It was crazy. The market was insane. It was jumping all over the show. It was just annoying the crap out of me. I was in a bad mood because of it. You know, every time I thought, okay, the next one, I thought, no, this doesn't look good. And then it swings both ways. And it was like OTC in the middle of the week, but worse. And so I just didn't put bets. And in chat I would see people going, okay, call for the next one, and then I don't. You know, and sometimes they would be right, most often than not they would be wrong, and I think, thank God I didn't listen to that guy. But I sat for days. I think it was about 3 days where I didn't actually place a bet, and I was so frustrated. But you know, that's part of trading. You have to be careful and you have to be patient. If you're not patient, you're going to lose money. Okay, I mean, right now there's a lot of these bets I'm missing. That would have been a sure thing over there. That's money I could have made now. That's money I could have made over there. That's money I could have made over there. There's nice spike over there. Money, easy money, easy money, easy money. You know, there's easy money, more easy money. If you think about this, I could have won a lot while just talking, making this video. Okay, but patience is key. There's always going to be another dip. There's always going to be another spike. I mean, whether I catch it now or I catch it in 3 hours time, you know, that's the part of training. There's another little spike there, however I don't see it crossing, so that would be risky. I wouldn't take that bet. I mean, yeah, you see, exactly, I wouldn't take that bet. So and don't think just because it spikes up quickly and comes down that means you know, this is still a good sure thing, because when it does that kind of spiking, oh my god, quite often it will go down, 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 down. It will get you right before the red line, just at the last second will spike up massively to just above where you hit put, and then you lose. You know, so these are risky. Anyway, so now you pretty much know the strategy. There they cross, but it's not, the green is not above. So let's see what happens. There it goes above, they crossed again. Yeah, you see, also risky. So you kind of got to watch for that, where they cross. Is it a solid good crossing? And what after there where they crossed, is the green going up straight after? No, it's not. You see, so you got to watch that. There we go, they cross, the red is going down. Also risky. But let's see, nope, next one's green. So you got to watch for these things. You'll learn in time how to spot these spikes, and if you just watch it for a while, you don't even have to bet, just watch it. Just watch where they cross, watch the habit, the pattern, watch how large the spikes are, and get the hang of the asset, and then you shouldn't have much losses after that. It should be pretty easy to tell, is it going up, which way is the trend going, should I bet, shouldn't I bet, and you should hopefully make a lot of money. So I know there's a lot of free signals out there you can use. This VXF alert is the biggest load of crap ever. I actually, when I first got this app and I started trading, I actually signed on for it. I can actually show you. Hold on, I'll pause the video. I actually signed up for this VFX alert, and what a load of crap. I mean, sometimes they do predict, but more often than not, it would show me that something is trending upwards when it's actually trending downwards. I was quite annoyed with this VFX alert, really annoyed, because I actually spent money on it to sort of predict the trend of the asset. What a lot of crap. I'll actually demonstrate to you. Okay, here we go, VFX alert. I'm just gonna pull this a little bit. Let's see, pull it to the side a little bit so I can actually see these. We'll pull that down a little bit. Okay, so usually what I would do is I'd put that over there, I'd put this over here, and I'd usually do something like this, and then you get adaptive strategy and you get the short-term signal. So let's leave it on AD for 1 minute. Okay, here we go, NZUSD going up. NZUSD, do you see it? Let's go see NZUSD. Okay, NZUSD is busy going down, but this says it's going up. Okay, and because I used to subscribe to this, I don't anymore, therefore it's locked. But usually it would show here, it's going up, and the signal strength would be showing 4 or 5 bars, and the asset's going down. So I do not trust VFX alert. Maybe they were good at one stage, they're a bunch of crap now. In the beginning I lost a lot of money trusting that, so I would not use that. If you have seen it on the internet, stay away from it. You'll lose more than you win. Trust your gut. Your gut will tell you everything. Okay, so you wait until you see it crosses, then you watch, is the green above after the cross, is the red below, and where are these indicators, and then of course use your judgment after that. Watch the pattern, and yeah, trust your gut. Your gut will tell you more than anything else. Okay, there you see it spiking up, but it's not crossing. There it's about to cross, and after the cross, is it above? There's the cross. Let's see the next one. Let's see what happens. Nope, 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 nope. There's nothing, just a tiny little one over there, but nothing huge above. You see, I could see already that it wasn't a big spike. However, here it crosses. The first one is red. Let's see, there we go, red again. That could probably be a put, but I'm a little late there, and I don't like to put so far. I don't like putting or calling 1 minute before. These spikes almost never last a full minute unless you're lucky. So I don't like, I usually, if I'm over here somewhere, 40 to 30, 40 to 30 seconds left, and then it spikes, that's usually where I bet. I don't like betting so far ahead. As you can see, it's already turning green here. It only lasts about 20-30 seconds, most of these spikes. So I don't like to a full minute before. place my bet. So yeah, just giving you guys some advice. The 7 indicator system works pretty well. It does help you determine where these spikes are. Okay, it can't always tell you exactly how long the spike's going to last. I don't think anybody can guess that. That probably will just come from experience and watching the pattern. But it will guide you. It will guide you to actually see, when something crosses somewhere, there's a spike, because these spikes is what separates you from a win or a lose. Okay, so that is binary trading. Okay, so now that we've got that out the way, let's close a couple of these. I want to go show you what crypto is. Okay, first, before crypto, I'll just quickly go to digital. Digital is pretty much like binary, same thing. Okay, you're going to predict whether it's a call or a put, but you have to predict 5 minutes ahead of the time. Okay, and it gives a much better profit because of it. So in the case of a put, you'll get 114% profit. In case of a call, you get 62, 92, and it jumps around. The closer you get to the line, the less these get, and so forth. So you're basically just predicting 5 minutes ahead of the time. Okay, that's pretty much it. That's the difference between the normal binary and digital. However, digital pays a lot more than binary. Okay, so that's the huge difference between them. Okay, so let's just close that. So you can play digital if you want. If you're good with predicting long term the market, at least 5 or 10 minutes ahead, then maybe digital's for you. Classic, I have not really played much with Classic. I don't know much about it. That's very new, so I'm just going to skip that for now. Crypto. Okay, crypto is cryptocurrency, Bitcoin, Ethereum, and so forth. Okay, so let's open Ethereum here. Now, cryptocurrency is very nice, but it's very long term. You cannot win in a minute or 2 or 3. Okay, you basically buy cryptocurrency, and once you buy, you can sell. So let me, for example, just buy here. I'll buy $1. Okay, so there I purchased now $1 of Ethereum. Did I take it? There we go, $1 of Ethereum. Okay, so again, I can close at any point, which basically a close means a sell. There is no limit on this. I can close it now, I can close it 5 days from now, I can close it 5 years from now. It doesn't matter. Okay, there's no time limit on cryptocurrency. You're basically just buying shares in Ethereum like you normally would on normal stock, and then when you're ready to sell, you close. So the ideal thing for this would be to buy low and then just wait for maybe a few days. If you know it's going to be spiking in the next few days, if you go online and read predictions or watch the trend or whatever, then buy low, sell high. Of course, the ideal thing with cryptocurrency is to buy large. Don't just invest $1. Okay, I mean buy large. Buy $5,000 worth or $10,000 worth, so that if it climbs over a few days and you sell it again, you make $1,000 profit or something like that. That kind of thing. On $1 you might get like $2 back or $3 back. That's really compared to binary, that's really a small share, small investment for the period of time, but it is safer. It is trading with cryptocurrencies is much safer. As you can see there, if I close right now, I get 0.13%, which is really nothing. It's going to be like 0.01 or something cents or something really small. If you look here, opening, it will actually tell you here profit is 0 at the moment. I mean, it's $1. It's like no profit really. So you want to buy when it's low, sell when it's high, and it's a long-term investment really. So it's something you do over a day or a few weeks or a month or a few months, like your normal stock exchange. And you would invest quite a bit. You'd put quite a bit down on these cryptocurrencies, and then just wait for it to skyrocket or go climb and then sell. And of course, you want to it's much safer. It's much safer. I'm going to close now. I should get nothing because it didn't even climb enough to make a difference. But It's much safer because you can check these trends online. You can go read up about Ethereum, and you know the predictions on cryptocurrency are much more accurate than they are on binary, because binary, you know, nobody knows where it's going to be in the next minute. But with Ethereum, you can see the general trend. The guys that work with Ethereum for a living, they make all these posts saying, well, we expect Ethereum to be up, you know, 10% tomorrow. They might not be exactly right. If they say 10%, it might only be up 8%, but they know that it's an upward trend, you understand, and they're usually mostly accurate. So if you know it's going to climb 8% to, you know, close to 10% tomorrow, then you're going to make at least some profit. So, you know, it's safe then to buy some today. So they're a much safer bet if you into the more safer kind of strategies than cryptocurrencies for you. I actually really hope that they add a whole lot more here, you know. I hope that they add a whole lot of currencies more here. But yeah, that's it. Mostly I trade binary. Sometimes I play a bit with crypto, sometimes digital. I haven't really played with a classic option yet. I might check that out sometime. It's very new. Wow, I see. Okay, the call time and the put time here is more than a day. Wow. Okay, so that is a long time to predict, but look at the profit there. So okay, anyway, so good luck. Yeah, hopefully you guys make a lot of money. It's quite easy sometimes, quite difficult and very frustrating other times, but remember, patience is key. Watch, watch, watch. Just keep an eye on that pattern, see what it does, wait for the lines to cross. When they cross, watch what happens when the lines cross. How big is the trend? Zoom out, look if it's an upward or downward trend. You know, you want to know this before you start messing around. You want to know, is it an upward trend, is it a downward trend, are the up spikes going to be much higher than the down spikes? These are things that you should know before you even place a bet. Is it spiking like this constantly, or is it nice and smooth? You know, you got to watch the pattern for a while before you actually place your first bet. And do the lines cross? If you've put your indicators, your 7 indicators, by the way, I use a 5-second interval for my indicators. I sometimes change this between 5 seconds and 1 minute. I never really use 2 minutes. For the purpose of this demonstration, I'll put 5. Mostly I have it on 5 or 10 anyway. So it's candlesticks, 5 seconds. My indicators over here, as you can see, there are the values. You can always play this video back and watch it again, and then just wait until the lines cross. They're not crossing there. It's a big spike, but they're not crossing here. They crossed there, the lines crossed. There's an upward trend. That would have been a nice call over there. Here they crossed. See there, the blue, the red was above the blue, now it's below the blue. There they crossed. There's a nice downward spike there. That would have been another nice win as well. I missed it, but you know, I'm not really worried about it at this point in time. But that would have been a nice, there they crossed. That was below, that was above, and as you can see, it's strong. Okay, so that would have been a nice win over there. Easy win, I think. Okay, be careful of when it looks like it dips a second time and you want to put again, because look here, it's green. It's green. Okay, so you've got to be very careful of that as well. So yeah, good luck guys. This is called the 7 indicator strategy. It's very good. You've got all of these indicators. This one shows you the general pattern. This one tells you whether it's spiking up or down and how strongly it's spiking. The 3 indicators over here will give you an indication of asset movement, slow movement, fast movement, the general averages, and you just look for when they cross. The parabolic will tell you whether it's going down or up and how strong it's moving, how sudden. Okay, and if you just you know, they all work in conjunction with each other, yeah, you should almost never lose. So that's it from me. Hope this video has been informative, and yeah, I shall chat to you guys again. I'll probably make some more videos in the future. So cheers. Oh, look at that nice spike over there. But did it cross? What is it? There we go. There was the cross. Nothing, but there's green over there. Anyway, Cheers.